Today's Sunday, September 1st, and this is a trade review on a position I took a few minutes ago involving the micro E-mini Nasdaq 100 futures. The ticker symbol is /MNQ, and as of the time of this recording, the spot price is quoted at 19,590 and 3/4. And since the futures market started trading a little over 3 hours ago, 6 p.m. Eastern time, it's currently down 32 points. So this is a broad look back at the daily time frame. Each of these candlesticks represents a day's worth of trading. This is the candlestick for Monday, September 2nd. Now, even though the calendar is still showing Sunday, September 1st, because the futures market started trading 3 hours ago, this is officially the trading session for Monday, September 2nd. So the red vertical dash lines are system-generated markers for expiration Friday for monthly option contracts. And the most recent expiration was back on August 16th, and the upcoming expiration is on September 20th. The blue horizontal lines are, from my perspective, reasonable support and resistance levels, just based on a look back here. So from my perspective, it appears that these values are reasonable to be either support or resistance. And right now, price is slightly above this local support level of 19,517. And also, we can see here that the Nasdaq 100 hit a all-time high of 20,983 back on July 11th. And since hitting this high, price fading to the downside, found support at the 17,857 support level. And then subsequent to two retests, there was a bounce, so much so that price broke back above 19,517. However, it appears that the momentum is stalling out, and it's possible that price may break back below 19,517, possibly coming back to retest 18,687 sometime this week. So if that does play out, then this could potentially be the start of the Nasdaq 100 stair-stepping to lower lows. So here we have a high, and then we have a cluster here, which is a lower high, and then next would possibly be another lower high. So again, that stair-step pattern. Also, just to help me navigate through this, what I did was I've overlaid this GAN-FAN pattern. So it appears that the overall market structure is just ranging in between these two yellow trend lines, whereas the bottom yellow is also acting as another layer of support, and this upper yellow trend line is acting as another layer of resistance. And we can see here that over the past week, price is having a difficult time breaking above this yellow trend line. However, sometime, I think within the next 12 to 18 hours, it's possible that price could break to the upside or get rejected and come back down. And the reason I'm saying that is that we have a strong yellow resistance level crossing over a potentially strong support level. So as price is ranging towards the apex of this crossover, it's possible the market's going to decide within that time frame that price may come back up, retesting 2348, or price gets rejected and coming back down to 18,687. And if that does happen, we have another crossover coming up sometime after expiration Friday in September. And this next crossover is around October 8th. So if price does get rejected, then this is another area I'm looking at where the market may decide to either, again, break to the upside or get rejected and price comes down even lower. But that's so far out right now. I just want to capitalize on this potential move heading into the apex right here. So because of this stair-step pattern to the downside, I'm speculating that the overall market will get rejected for a potential pullback. So switching over to the trade tab, I took a bearish position. I didn't short the actual futures. I shorted via option contracts. So right down here at the bottom left are the details to my trade. Right here where it says +1, this is the trade I'm currently holding. And relative to the spot price of 19,594, I picked up an option contract that expires this Wednesday, September 4th, with the strike price of 19,425. So if my speculation is correct, then I am speculating for that pullback, at least a 200-point drop over the next few days. So here under quantity, I only picked up one contract because, again, there's a strong probability that price could get squeezed to the upside. So I thought I'd just mitigate the risk with one contract at this point. If or when price breaks below 19,517, and that's when I'll consider adding a second contract. But I thought I'll just start with one. This contract, or all of these contracts with Wednesday's expiration, go worthless in 3 days. My entry price is at $43.25. And since entering the trade, the premium has gone up as the Nasdaq 100 is starting to trade to the downside. So the P&L, the profit and loss side of the ledger, is reflecting a positive balance of $10. Now, I was in a short earlier, but this contract, the 19,250, this contract was expiring this Tuesday. So what I did was I got out of the trade. I incurred a $23 loss, however. I did get out of the trade because I wanted to buy extra time. So I switched from a Tuesday expiration to this Wednesday's expiration. And I paid a little bit higher in the option premium because the strike price of 19,425 is a lot high. It's 200 points or so greater than where I have the 19,250. So this was a very aggressive expiration date with a much lower strike price. So I thought I would get out of that and buy an extra day, right? Because when trading options, time is of the essence. So I thought, let me just add some time to this position, and I picked up the 19,425. So that is the current status. As a matter, before I end it, I just want to clarify the valuation. So here in the description of this option contract, it says 1/2. So here my entry price is $43.25. I need to multiply that by 2, as that is the multiplier for this specific product. So not including commission, I'm risking $86.50 over the next 3 days for this possible 300-point move to the downside. So that's what I'm risking so far. And then I'm looking to add at least one more contract if price does fall below that support level. So what I'll do is I'll end it here. I'll pick it up when something more significant does occur. Now, also, the stock market is closed tomorrow in observance to a national holiday. However, the futures market will continue trading through the afternoon. I believe it suspends trading at 1 p.m. Eastern and will restart trading regular time at 6 p.m. Monday evening. So I'll most likely do a follow-up status check heading into, sometime in the afternoon tomorrow. So more to follow. So quick update. Today is Tuesday, September 3rd, and the stock market will start trading in under an hour and a half from now. But the Nasdaq 100 is currently quoted at 19,495 and a quarter. And since the futures market started trading last night at 6 p.m. Eastern, it's down 127 points. So, it appears that the resistance level is still holding. But again, there's this crossover coming up in 2 days. So it's a matter of time as to whether price will break to the upside or break to the downside. And right now, price is at the cusp of either breaking to the upside or downside, as price is literally at the support level and slowly fading lower. So with all things said, switching over to the trade tab. I did add a second contract, so under quantity, I'm holding 2 of these contracts now. Both contracts will go worthless in 1 day at the close of tomorrow's session. The premium is now valued at $74.50, and the P&L is reflecting $155. About 45 minutes ago, the trade was up a little over $200, so there's been a bit of a rally since the past hour and a half. So who knows? Maybe momentum will pick up either to the upside or downside when the stock market opens. And for sure, the volume of trades will increase, considering that yesterday was a national holiday and the futures market was trading on a abbreviated schedule. So we might see volatility kick in. So I'll go ahead and pause it here and I'll pick it up end of day.